just explain what's changed in the past sort of 30 minutes since the market's dropped another, 100 and some odd points, Rick? What's happened specifically in the credit market over that same duration?
Well, David hit it. The trust of one banker looking at another, trying to get funding. You know, whether you look at LIBOR rates, as David pointed out, blowing out, or against OIS. I'm looking at Eurodollar futures, which price to LIBOR. And we're down 13.5 basis points in the June futures, down 11 in the September. We're down 7.5 in the Ds. As they go down, the cost of borrowing goes up. And the other thing not a lot of people are talking about, David mentioned blowing out, whether it's commercial, mortgage-backed securities, traditional mortgages. But let me tell you something. The high-yield market and the investment grade, to a lesser extent, are really widening out, and not only in the U.S., but in Europe as well. And it does have the same whiffs of Lehman. You can argue that our banks aren't figuring as negatively, but the European banks are looking at each other with the same crooked brow.
And let me ask you that question, because I know Mohammed Al-Arian on Power Lunch was talking about this, that this could be a Lehman. It raises the question, Simon, of something that we were talking a lot about 6 months ago and haven't been so much lately, which is that all those aggressive write-downs that the U.S. banks took, the European banks didn't do. And is this now time to pay that piper and going to raise that that fear?
I think we're in a much more short-term situation than that. I think we're talking about central banks now actually needing to pump liquidity in from the type of moves that you're getting on the spreads. I think it's about the Fed with swaps as well, to ensure that, and it is the European Central Bank that is going to have. This is a monetary situation that the monetary authorities now have to intervene, regardless of what the politicians are doing.
I think you're right. Now, to be clear, Mohammed said he did not think it would be as bad as what we saw with Lehman and Bear Stearns. However, his feeling was that the level of distrust was rising to the same level that we all felt and experienced in the weeks and months before Lehman.
To stamp it out,
exactly.
Before it goes any further.
And it didn't get stamped out in our markets, and that's part of the run that started to happen on the
But didn't he try to do that, Jean-Claude Trichet, that is, Rick Santelli, this morning, when he said 3 times Greece will not default? What do we read into that? Do people not believe him?
I
Does he not have the
Steve Leisman. Yeah, and Steve Leisman is kind of correct here, that if you believe what he says, you buy these outrageously high yields. But since investors aren't, I have to tell you, there is a feeling that the European Central Bank and bankers have lost control of the situation.
Let me just reinforce, of course, what is the problem for Jean-Claude Trichet here. If he starts buying the debt of an individual country, i.e. giving them cheap credit, those in the rest of the Union will say, why are you subsidising their debt pile and not mine? It's a huge issue of sovereignty, and it would be an unprecedented move if and probably when, I imagine, it happens.
What is his recourse, though? I mean, what I want to know is, and I'm sure we all would like to know, Simon, what else can he do short of pulling the trigger on aggressive quantitative easing and buying back debt? I mean, I'm not sure that he has a lot of options.
Let's be clear, he's been pushed to the edge because of the inability of the politicians to rapidly stamp out the problem that we have. We were talking back in September or October last year of intervention on the Greek market. I said to you then, it will come. I believe the Germans would do it. But it took so long that the cost has accelerated and the situation is now getting out of control. They have to have an action of shock and awe to put an end to this.
And we'll see if they can. I mean, the U.S. was able to do that. Maybe one could argue it took them too long, but they were. But for the ECB,
it turned out to be a pretty good trade for those who were willing to go along.
Yes.
If you bought the financials a year or so ago, you did pretty well. I'm not sure.
Or Greek debt in this situation, if you believe that.
Well, that's what gets to that Steve Leisman.
But for perspective, Nigeria can borrow at 4%.
Yeah.
Okay. Greece can borrow it, if they can at all, 16. 15.
Arguably, they don't need to, though, because they're taken out of the market to buy.
But just for perspective,
as we have the market right now at the lowest levels, because we're now down about 353 points, a loss of about 3.25%. We'll get you some landmarks in terms of this is the worst since, because we're now looking at sort of in an absolute value numbers we did see during the heat of the crisis and when we had it in this country. We're obviously seeing money flow into biggest one-day loss in a year is what we're looking at, which does put us right back at the right after the moment when we hit the lows of the U.S. markets. Let's find out what's going on in gold, which obviously would be your traditional safe haven. Sharon Epperson's monitoring that at the New York Merc. Sharon, what are you seeing?
Well, if you don't believe that Trichet is correct and that you still think that there are serious problems with Greece, you want to preserve your purchasing power. If you think that the contagion is going to go to Spain, to Portugal, to other countries, and you want to preserve your purchasing power, you're going to buy gold. And that is why we have seen gold here rally above $1,200. We're up $21 right now. We've given back some of those gains, but we got to $12.01 for gold, and that is the highest price we've seen since December of last year. Keep in mind, of the trade that a lot of folks are doing and that traders are telling me they're putting on is selling the euro and buying the gold ETF. So they're selling the FXE and they're buying the GLD and the IAU. We're seeing that. We saw that overnight as European trading was going on, and we're seeing it continue here after the close at the NYMEX. Meanwhile, in oil prices, they're below $78 a barrel, and we are seeing prices move below the 200-day moving average. Again, a lot of the selling that we're seeing here is technical selling. We're watching what's happening to the euro. They're watching what's happening to stocks as well, and they're selling oil and other commodities. Gold is holding up well, of course, as the safe haven play, as the alternative currency, but oil is coming off sharply, and the next level to watch here for oil prices could be somewhere near $75 a barrel.
Sharon, thank you very much. And as she mentions what we're seeing in commodities oil, let's bring in Addison Armstrong here to get your sense. Addison, what's your take on what we are seeing in the energy markets, and in particular the big sell-off we've seen in crude over the past couple of days?
Well, it's very interesting. We were talking about it earlier on the desk here. What we've seen over the past 3 days this week before today was that although the market was coming down, the level of open interest hasn't really changed that much, which means, in effect, that the bulls have been trying to hold on to their position very strongly all week. It'll be interesting tomorrow to see what happens to open interest, but I suspect that what we're seeing is that the bulls have finally given up and have realized that they can't hold on, and the fundamentals and everything that's going on in Greece has finally got them out of the market.
But Addison, here's my question as we try to take a step back. I mean, we're looking at a loss here now, 422 for the Dow. We are back in that sort of, I think it's fair to use the word now, panic territory that we had seen back when we saw this happen here in the U.S. But yet, if I take a step back, I think about the China story, which is ostensibly what's been driving crude prices, and there shouldn't be any change in that because of what we're seeing on our screen right now. Well, should there be?
I think I beg to differ a little bit there, Aaron. I think that, first of all, we have seen China move at the government level to try and slow down to their economy. The other thing that I've got to tell you is that this slowdown in Europe that's going to happen in the wake of what's going on in Greece, it's inevitable, is going to impact what's happening in China. Who are they going to export their goods to? And the U.S. isn't really that strong on its feet right now either. So China's export markets aren't there. They're already slowing down. They're taking away stimulus. And I think that's also weighing down on oil prices.
All right, Addison, thank you. We appreciate it.